Welcome back to Teshkid FX for another GRT price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the GRT chart, which at the time of this recording has continued to hold above the 20-day MA here on the daily chart. We have also continued to obey the Elliot wave structures, and before I get further into the technical analysis and also give you my next price targets here on the GRT chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the daily chart by first giving you the long-term scenarios that I'm expecting to play out, where you can see that from these low prices that we had been trading within, we saw that massive bounce to the upside, seeing the all-time high at around the $2.9 mark in what I'm terming as that first wave to the upside. And after seeing the all-time high, we started the bear market, where we had been seeing lower prices in a move that gave us a low at around the $0.0518 mark in what I'm terming as the low for that higher Elliot wave count 2. And after seeing the formation of a higher Elliot wave count 2, whatever we expect on the long-term scenarios is a massive bounce to the upside in the formation of that wave 3, whose minimum target areas here on the daily chart is at the fib level 1.618, and that is at around the $4.6866 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. And jumping to the 4-hour chart for further analysis and also give you the short-term scenarios that I'm expecting to play out. Here on the 4-hour chart, you can see that after making our low at around the $0.0518 mark, we started this massive bounce to the upside, obeying the Elliot wave structures, where you can see that we have seen the high for that wave 1, then we have seen a corrective structure in the formation of that wave 2, and after seeing the low for that second wave, we started this massive bounce to the upside in a move that has now given me the high for that wave 3 at around the $0.2325 mark. And after seeing the high for that wave 3, whatever we expected next is a corrective structure in the formation of this wave 4, and using the Fibonacci's connecting them from the low of the second wave to the high of that wave 3, that gave me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.618 and the fib level 0.5, which lies between the $0.1649 mark and the $0.144 mark, and that is the minimum that I expected that fourth wave to the lower side to do, which is a target area that we have fully maximized. And after fully maximizing it, whatever we expect next is this massive bounce to the upside in the formation of this wave 5, and sketching out minimum target areas to the upside in the formation of that wave 5 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gave me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $0.2761 mark, and that is the minimum that I'm expecting that wave 5 to the upside to do. And because a wave 5 to the upside is an impulsive wave, I'm also expecting to see a 5-wave structure in formation within the formation of that wave 5, having the wave 5 of the fractal wave fully maximizing our target area at around the $0.2778 mark, and that is what I'm expecting here on the short-term scenarios. And zooming in to get a little bit into the details of the fractal wave within the formation of this higher Elliot wave count 5, which I believe we are seeing over here, where you can see that after making our low in the formation of that wave 4, we saw that bounce to the upside, giving us a peak at around the $0.1873 mark in what I'm terming as the high for that wave 1. And after seeing that high, we started this corrective structure in a move that has now given us the low for that second wave to the lower side, and getting to see whether the second wave has done the minimum that we expect a wave 2 to the lower side to do by connecting the fibs from the low of the first wave to the high of that wave 1. That gives me a minimum target area to the lower side in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, and I can mark that target area here on the charts like that, which is a target area that we have now fully maximized. And there are chances that very soon we are going to start that reversal to the upside in a bounce that should give us the high for that wave 3 before we can expect a wave 4, and then push even higher in the formation of this wave 5. And given that we have done the minimum that we expected this second wave to the lower side to do, we can sketch out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1. then drag the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $0.2376 mark, and that is the minimum that I'm expecting that wave 3 to the upside to do. Then expect a wave 4 and then push even higher in the formation of that wave 5. And for that move to also play out, we need to see a break above the 20-day MA so that we can have the support that we need here on the 4-hour chart for us to continue pushing even higher, gear up and see a break above the wave 1 high at around the $0.1873 mark and continue pushing even higher to fully maximize our target areas. But as long as we are holding below the 20-day MA, there's a risk of making one more new low in the formation of these higher Elliott wave counts too. And because of that, using the Fibonacci is once more connecting them from the low of the first wave to the high of that wave 1. That gives me another new target area between the fib level 0.5 and the fib level 0.78. We can still extend our target area to that key area on the Fibonacci because that is still a valid target area to the lower side in the formation of that wave 2 between the fib level 0.5 and the fib level 0.78, which lies between the $0.163 mark and the $0.1493 mark. So we can still extend our target area to that key area on the Fibonacci, which can only happen in case we continue holding below the 20-day MA and also lose the fib level 0.618 to the lower side. And that is the only time that we can think of fully maximizing the fib level 0.78 in the formation of that wave 2. And once the low for that second wave is in, then we can expect that massive bounce to the upside in the formation of that higher Elliott wave count 3. So in this video, I'm giving you new target areas in case this breakdown to the lower side continues. There are chances of fully maximizing the area at around the $0.1492 mark in the formation of that wave 2 in case the breakdown continues. And in case such a move plays out and we get one more new low in the formation of that wave 2, then we can use that new low to sketch out new target areas to the upside in the formation of that wave 3. So that is what I'm expecting here on the short-term scenarios, and also taking a look at the indicators to see what movements will be supported. On the RSI, we are trading at around the 37 mark, meaning that in case we see a reversal on the charts and continue gearing up in the formation of that wave 3, that move will still be supported here on the RSI. But in case we continue pushing even lower in that breakdown, that move to the lower side will still be supported on the RSI. Also taking a look at the MACD, we have been able to print a bearish cross, and we're also seeing an increase in the selling momentum here on the MACD, meaning there are chances of seeing one more new low in the formation of that wave 2. And once the low for that second wave is in, then we can expect that massive bounce to the upside in the formation of that wave 3. So that is what I'm expecting here on the short-term scenarios and also on the long-term scenarios. And let's be patient and see how that plays out, and I'll be keeping you updated.